Welcome to Friday Fuel.
What's up? What's up? Good morning. Good morning. Happy Friday, everybody.
What up? What up?
How's everybody doing?
How's it going, man?
I'm fired up, man. I'm fired up. It's Friday.
Episode today, 100%.
I'm excited, man. We have the one, the only. Before I say his name, I'm going to give him a little bit of an intro. So this person has sold over $100,000 in life premium in just a month, mainly final expense. He also has performed on Broadway and is one of the best cornhole players that I've ever played with.
I mean, I'll have to see about that. I don't know about the last one. I believe you up to that point.
I don't know if this person's ever failed at anything in his life. I feel like he's good at everything he does. So the one, the only Pete Fournier, everybody.
What's up, guys? I failed at plenty, including high school baseball, but I am nasty at cornhole.
I think the only failure would be choosing the Jets as a favorite NFL.
That too. I don't know where that came from, but I was an idiot little kid, and I like the color green, I guess.
And you live in North Carolina, right?
Yeah, now I do. I grew up in Jersey, so that's where it stemmed from initially. Although I could have picked the Giants, I guess, but
happens to the best of us. I chose to be a Chargers fan. I live in Idaho, so I mean, it's just. Sometimes we're just dumb. So
I chose right for right now.
Truth. Yeah. I think the last time they had the opportunity, you weren't born yet.
Yeah. It's true.
30 years of pain. Apparently you're pretty decent at pool too. Joe's saying.
Not bad at pool.
And then I've seen you've been posting about pickleball as well. Are you pretty good at pickleball?
Yeah, so I played the hardcore racquetball in college and after tried to play some pro tournaments and stuff like that. And I got into the pickleball game mainly to sell Medicare, but now I'm like kind of addicted.
How did that work out? I mean, have you sold a lot of Medicare doing that?
A ton of med subs, yeah, and a couple of annuities from the pickleball court. So I play at 5:45 a.m. on Tuesday, Thursday, and Saturday. So we play for like 2 hours. There's some younger people there too, but there's some really awesome like Medicare eligible players.
That's pretty sweet. I just got my pickleball rackets for Christmas. So I gotta get
It's an awesome sport. You gotta play it for like 3.5 hours to get a good sweat on, but it is fun.
If I'm remembering right, and then we can kind of get more into the insurance stuff. Didn't you try out for the Jets too?
That was like it didn't pan out, obviously, because I'm 80. But they had like an open call. I forget what year it was, but it was like 11, 12, 13 years ago, maybe. And my buddy actually works for the Jets. He's a scout. So we joke every year up until we turned about 30 that we should just go every year to the tryout and see what happens because they're such trash. But I would definitely take a slant route up the middle for, a couple $1 million and then be done.
That would be nice, man.
Yeah.
Well, tell us about All Things Insurance Group. How long have you been doing insurance? What got you started?
Sure. So I started ATIG in November of 2021. I've been captive. I've been independent within a hierarchy. I was president of sales for an IMO for a little while. So I've seen like all shapes and sizes of models and opportunities, and really started this so I could turn agents into Swiss Army knives. We do everything from life to Medicare to ACA to annuities, group benefits, advanced market, some retirement planning, nothing with FINRA, thank God, but everything else associated with it. And I started in college in basically 2010. I got my license, and me and a couple fraternity brothers, they were making like decent college money. You make 35 grand your junior, senior year of college. It's basically $1 million. So I was like, I bet I can do this. So I got licensed, went to Northwestern Mutual with them, They had us do like a project 200 or whatever. It was a nightmare. I was slinging like $10 term policies that required a physical to my fraternity brothers that didn't even want it, and it sucked. And it was not a good experience. But if I could get through that hard time, every other opportunity was pretty easy. So I went to another captive that provided us some leads, stayed there for like a year and a half, and finally went independent in late like 2011, early 2012. And then I made a bunch of mistakes there. Another really solid failure is recruiting some scumbag agents and getting slapped with almost 50K of roll-up debt when I was like 20. So you live and you learn.
Yeah.
Dang, man.
Yeah.
How do you dig yourself out of a hole like that? Like when you get stuck in a situation, I mean, what was your route? Did you go and recruit more agents, or did you just
hell no,
nose to the grindstone?
No, and I only had I'll say 2.5 carriers back then on the independent side. One was Monumental Life, which doesn't exist anymore. It got like absorbed by Transamerica. And the others still exist, so I won't name them. But not the best products either to have to go sling insurance for and outright that debt. But I took a W-2 job at a PNC agency too. It was still like in the industry, but it was like 35 grand a year plus commissions. I was slinging surety bonds, which, no offense, Joe Camper, are fucking terrible to sell. So it was tough, and it took about 18, 19 months to get out of it, because I still had like student loan debt. I had to move back in with my parents, so I left Cleveland where I lived and moved back into my parents' basement. Like, I mean, you do what you got to do. My dates with my wife were like Netflix and chill with a bag of Doritos. Like, I didn't do anything fun for 18 months. I was also in like a bad state of mind. Like, I had to watch The Secret like literally every night because I was just waking up pissed off at myself. I mean, you see, it's one thing to have like $0 in your bank account, or you see like $10 in your Chase account when you wake up. When you're like negative 67,000 and it's on a credit card and it just has that minus sign on it at all times, like that's a kick in the
face a little bit.
Yeah. So if you're in that situation now or close to it, or whether you're in debt or you feel like you're broke, like do everything possible to get out of it, because like in the grand scheme of things, I've been doing this for like it'll be 14 years in December, which is wild. That 18, 19 months was kind of a blip on the radar. It's only like 10% of my career. So like universally, it's not that big of a deal, but when you're in it, it feels like an eternity. So if you're in that situation now, just know you will get out of it. And if your plan is to stick with this as your career for life, it's going to be a very minute part of your overall timeline. You know what I mean?
That's good. P, I had a couple questions. First one is, obviously in the beginning of your career, it looked like you were jumping from like, you were trying to find a home really, and there's a lot of starting agents that do watch, the Friday Fuel, the Monday Mindset, Tuesday Trading, Winning on Wednesday, whatever it is. And what's, if someone were to start off, would it be better to go like LOA, captive, independent? Which way do you feel like it would be better for a starting agent?
So like I might be a little biased because we have an LOA structure, but I would not pigeonhole yourself to a captive carrier. I think it's silly. I don't know how they're still in business besides recruiting a bunch of college kids and then hoping that 1% of the 1% pan out and it's a career, and that's how they build their agency over 150 years. But really, like your first 12 to 18 months, unless you got like 3 to 5K to start at absolute minimum, and you're going to work balls to the wall, which, as you guys know, like agents just don't. I would go LOA for like a year or two, get your leads or marketing paid for, learn, make some decent money. Like we all see, and you guys are all successful. You see the I flash watches and cars and shit like that on Instagram, right? Because it's fun. Everybody's like tied to the money, tied to the comp, tied to whatever. You can make 70, 80, 100, 150,000 being LOA to somebody. And then just have the conversation or make sure the contract doesn't like absolutely suck in your favor to go get released, or go to a person that does have an LOA and a brokerage like many of us do, and hopefully you outgrow the LOA and you can go broker now. But I think, and I was on with like Jeff, Tony, and Glenn earlier this week. I think with the changes in our industry, like the FCC ruling, if the CMS proposal goes through, whatever, you're going to see a lot of people migrate to an LOA type structure because they simply won't be able to afford being an independent agent. And like you guys know from participating in Ultimate Agent or writing your own business or whatever, it's not cheap to be an independent agent. Like I would say at absolute minimum, you got to be spending like $2,000 a month to make shit work. And now that age leads are pretty much illegal in 2025, which I'm very sad about. Like you got to have a decent chunk of change to pay for $30, $40, $50 cost per lead.
Well, I'm sure they're going to go up even higher than that.
Oh yeah.
So.
Yep.
Can you explain the LOA model just for anybody who doesn't know what that means?
Yeah, so LOA is licensed only agent. You're essentially a solicitor, you might have heard, under somebody else's umbrella. So essentially your commissions are assigned to an agency manager, an upline, an IMO, whoever you're partnering with, and they will pay you. So we run our payroll once a week, right? So the cutoff for business, issue paid business is Wednesday. If an issue pays before Wednesday at noon, we pay on Friday. And it's kind of like a job. I mean, they have rules and regulations and like goals and metrics to hit because I'm obviously paying for their marketing, so they have to adhere to that. But you're getting your feet wet as experiencing what it's like to be an insurance agent without necessarily all the risk. The one thing that I would tell you though, if you're new and you're starting LOA, think in your mind as if you're spending the money. Because like your comp might go up on the independent side, but so will your expenses. So I try to instill, at least in our team, like act as if you're paying for these Facebook leads, for these transfers, for this direct mail, and see whether or not you would be profitable if you were on your own. And track that for 12 to 18 months, because I'm a big proponent of like tracking ROI, right? Even for independents, making sure you know your numbers. Track that stuff for a year to 18 months. And when you're comfortable and you're like, wow, I would have been in the black like 80 grand. Well, fuck, then transfer over. But if you would have netted 10,000, stay on the LOA for a little while. You know what I mean? And use someone else to mitigate your own risk. Because too many people fail out because they don't want to swipe their credit card, which is totally fair,
Yeah.
And how do you break someone out of that, attitude if they are a successful LOA agent to go ahead and invest in themselves and invest in leads and break out of that kind of struggle of swiping their credit card and whatnot?
So we have some training wheels for it because I know the transition can be crazy. And it's funny, when I first started doing LOA like 2.5 years ago, this has taken a little while to like figure out comps and what makes people happy and whatever the case may be. We have like a training wheels approach. So I have like a base plus commission model. I have a commission only free marketing model. And then I have a finance lead model. So the finance leads, it comes out of their comp. They're still paying for them. It's at net cost. So at least they're not getting like their eyes gouged out. And I'm not trying to profit off the lead. I just want the premium. But because it's financed through future commissions, they don't have to feel the pain of swiping their credit card, but they can still analyze whether or not they're in the black from week to week, month to month, year to year. So after that transition, then we have a big boy and girl conversation and we say, hey, look, do you want to move? Like you'd be better off moving. And I have conversations every 6 months with some of these guys and they're like, no, I'll stay, or yeah, I'll move. Like, I don't want to force them in one way or another. As long as they're happy and profitable and I'm happy and profitable, you stay on whatever comp plan you want. Like, I don't give a shit. But we try to make this like stepping stone approach. So within like 24 to maybe 30 months, you can feel super comfortable being an independent agent, hopefully, knock on wood, still under our ATIG umbrella, but now you're running your own show,
So somebody asked, if you don't mind, what are the 3 levels again? I think they're asking about LOA broker and then.
Oh, gotcha. And let me preface this too. I don't want to confuse anybody because I know a lot of probably new agents are watching. LOA is whatever comp structure that agency, that upline, or that IMO is dictating. Right. So just because I'm saying this is ours, that doesn't mean that's how LOAs get paid. You can make it however you want as an agency owner. Right. But ours is base plus commission, commission only, and then commission only at a much higher rate. and the leads are financed through your future commission. So I'll prepay, let's say, $1,500 a week for you to have leads. You're not going to feel it until you see your commission checks, and hopefully you're in the black, knock on wood, every single week. Right?
Yeah.
Perfect.
So I kind of want to go back to when you were in the negative 60, whatever, and then what got you to the point to where you had the confidence to write $117,000 in a month? Like, how long was that process? What was your training like? Were you just basically nose to the grindstone? I'm doing this. I'm training myself. Did you have a good mentor? What did you do there?
Yeah, had really terrible mentorship along the way until I met, and I'm still like best friends with him to this day, Sam Wolf. And that dude, he gave me advice one day of like, put it on a credit card and you'll make it work. Now he saw my stats from a sales perspective, and like arguably, even though I take the blame for it because I hired these shitbags, it really wasn't my fault from a personal production standpoint. I still knew I could write 11, 12, 15,000 in a weekend if I did a travel trip. So he was like, dude, just get like a 0% APY credit card, put that shit on it and go to work. And granted, you're giving money to the carriers, you're giving money to credit card companies. So your margins at the end of the day might still be net zero and you're eating ramen noodles. But I was always confident as a producer that I could go and do it. And when you're reverse engineering the math and you say, okay, listen, in the next 15 to 18 months, I know I can get out of this. I just have to execute. And that's really it. I don't really have a problem getting out of bed in the morning. Like some agents do. They're like, I don't want to do anything today. But I never had that issue of like actually working. So I was always pretty confident as a producer. Now, honing your skills and be able to do like a 6-figure month. I think I've done it like 4 or 5 times since that, the June one, in all different strategies and structures, like age leads, new leads, referrals only, that kind of thing. You have to sharpen your skills and be diverse in your product knowledge, and not necessarily like what's the crediting rate on the Allianz IUL. Like I'm not talking that. I'm talking, what route are you going to go when you're sitting across the kitchen table or you're on the phone with these people? Do I go Prosperity? Do I go AMM? Do I go this? Do I go that? That with a combination of some lead spend and obtaining referrals, because on my first 6-figure month, about 60% of that business was referral based. Yep. So I would have only had 40 or 50 grand if I was just buying leads. So my lead spend for the first month was around 6,700. And then the rest was referrals. So having the confidence and product knowledge, at least to know where to place that person, being good at executing at referrals, and then just working your ass off. Some people can't have 60 appointments in like a year. I was running like 60, 70 appointments in a month, while trying to run an agency. So if lack of confidence is your issue when it comes to that, because I think that's the only thing that would like deteriorate it. The only 2 things that's going to help you is knowledge and money. It's hard to not be confident when you look at your bank statement. You're like, sweet. Or it's hard to not be confident when you know how to sell every, let's say in my case, life insurance product out there, right? So confidence only stems from, I think, those 2 things. You can stand on a pile of money, you can stand on a pile of knowledge. And if you're standing on both with both 2 feet, you're in a good place. You know what I mean?
Mm-hmm. Ollie has a great question.
Go ahead.
Yeah, Ollie has a great question. What does that day look like whenever you're in the middle of one of those 6-figure months? What does your average day look like?
Yeah, great question. So I run like 2 type. I still love the field. I write over the phone occasionally because I got to teach agents how to write over the phone, because 65% of our agency is now telesales, because I think people would just want to work in their pajamas. But I always like the field. So I would say about 90% of that business was, face to face. I would either run like a 6-day work week. So I'm calling Monday for Tuesday and Wednesday, Thursday for Friday and Saturday. I didn't make that up. That's like the ultimate captive schedule on the planet. Name any captive agency, they run that because it works. Or I would do like big win weekends. I write a lot of younger people. If I can help it, I don't mind doing final expense, but my average deal size on like a 40-year-old is going to be like 300 a month. So I try to target that, know what lead you want to work. So I would make calls on Wednesday and Thursday, like all day for a huge Friday, Saturday, and Sunday. So you want like, 25, 30 appointments on a Friday, Saturday, and Sunday, run and gun, and have Monday and Tuesday be your weekend. If you're still running in the field, I think those are still the two best schedules out there. Everybody's got their own, personal life and problems and issues and things come up. But if you can sit down and do one of those two, it's really hard not to be successful. And I'm a big proponent, if you're going into the field or you're working direct mail leads and stuff like that, set your own appointments. I don't think there's an appointment setter out there that's going to be better than me on the phone. Plus, you're starting the sales process then and there. You're building rapport. You're planting seeds for your potential sale when you get to the house. So big proponent of calling your own leads, which I did every time. I never used this setter.
I do want to put a plug in for you. So the first time I met Pete was at Medicare Con, like 2021, I think.
Yeah.
And all I had ever sold was Medicare. And then he did a presentation on selling $117,000 in life insurance. And so me and my buddy Mason, who are business partners now, were playing some cornhole with him, and he was talking to us about it. And we ended up buying his book, Sling It, on the flight home. And that very next month, I had never written a single lick in, life insurance before. And so I just used his script in that to call my current book of business. And I sold $12,000 my first month.
Ooh.
And so it was like, and it was your Social Security income protection.
Oh
nice. It's all made up.
Yeah. It's still a final expense plan, but it's just, you're protecting their income. So the premiums were good. I honestly think that I had like a 95% close rate. It was current clients.
Sure.
And so I mean, for those Medicare agents watching, call your freaking book of business and get Pete's book, Sling It, and just copy it word for word. You'll do just fine.
I appreciate that.
Pete, I was going to mention, so Collin brought up the Social Security income protection. If there was one thing I remembered from SWAT and it stuck with me, it was a Social Security income protection. And I can tell you appreciate this. I've wrote well over 80 policies just off the Social Security income protection. So
yeah.
I've been in homes where the client says, no, I don't want life insurance. And then I say, okay, great. Well, how about this? And then I bring up the whole Social Security income protection. They're like, wait, well, I can get my check, my husband's check when he passed away. Yes, you can, for the following year. If you could explain to the audience watching, what the Social Security income protection really is, and how good it is for a client.
Sure. Yeah, I'm glad you had success with it too, Alex. It's a pitch that I developed like a while ago. I just got sick of getting $50 to $60 a month checks, and I'm sure I'm not the only human that uses it. But so essentially, you're just protecting their Social Security income utilizing a whole life policy, right? You use whole life for it because it's guaranteed to pay out. But let's say John's making $2,000 and Mary's making $1,000 a month. For those of you that don't know how it works, if someone dies, you get the greater of the two Social Security checks and you lose the lesser one. But in John and Mary's case, they're going from $3,000 to $2,000 a month. That's a 33% dip. They can barely survive now, let alone when you lose 33% of your income. So instead, you just have to insure the lesser amounts, right? And max out your final expense policies. I've stacked like 4 or 5 policies in the house because they wanted it for life. You know what I mean? So use your brain a little bit, but you just want to insure the smaller of the two incomes. And you do a 3-option close, which my agents never not do a 3-option close. And you tell them they could get that income for 20 months, 40 months, or 100 months. Which one's more comfortable for you? And guess what? We're going to set it up for Social Security billing. So it's not going to actually come out of your check, but it's going to feel like it's coming out of your check. How cool is that? And we're only using 10% to save the other 90%, or we're only using a dime to protect $1. Does that make sense? And they're like, oh my God. And to Alex's point, I've been in houses where I have shown final expense, straight up burial, Social Security income protection for, let's say, 30 months. It's the same fucking price. Sorry, I'm from Jersey. Same price, $300 a month. And they're like, that one looks a lot better. It's the same shit. It's the same thing. It's just the way that you package it. So, moral of the story, sell concepts to your people, especially on the life insurance side. No one wants to buy life insurance. That's why mortgage protection, final expense, infinite banking, all this crap exists because people like purchasing concepts.
So good.
That line, the dime for a dollar is so good.
I remember at SWAT, Alex and I actually went in together on your course that you were selling, or your, the videos that you had, and we split that cost because we were like, this is dope, dude.
Yeah,
I appreciate it.
And it's not fluff.
Where can people find that course?
I'm not going to be here to motivate you. I'm going to teach you shit to make money and let your mom or dad or upline or somebody else or, Tony Robbins motivate you.
Where can people find that course?
Yeah. You can just go to PeteFournier.com and go to the store. I got a million of them. There's one specifically for selling seniors life insurance. My average FE deal is around $167. And our agency average right now is about $916. So industry average is about $62.50. So I know what I'm doing in terms of upselling seniors. So if you just want the senior one, because maybe you're in the Medicare space or something like that, by all means, you could just do the senior close one.
This is more of a personal question, just for my knowledge.
Sure.
I have a ton of, like, the majority of my book of business is Medicare, Medicaid. Do you run into that a lot? Because it's just when somebody's making like $850 a month, like, yeah, I could try to sell them $150 a month.
You can sell them 85. I don't know about 150, but dimes to protect the dollar, you can sell them 85. You know what I mean?
Yeah. So,
use in that case, because everybody's going to be like, well, I sell poor people. Okay, but how? Use the LIS application. Most of our deals on the FE side come from replacing other shitty policies in the DSNP market. Because if you use the LIS application, and this could be outside of a Medicare, because I know some like compliance Nazis watching this and they're going to be like, you can't, I'm not talking about same appointment when you're enrolling in MAPD, like go call your clients and tell them you got to do an assessment on their LIS application. You're going to ask them all the questions. And at the bottom, it says, do you have anything, cash value life insurance, existing life insurance, etc.? It's not Pete asking, it's the government. And they're going to be like, yeah, I got this policy. It's 18 months old, blah, 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 or it's 18 years old. And I have all this cash value. Maybe you want to do reduced paid up, whatever the case may be. But like use the tools that the industry is giving you in order to sell. Don't just try to push the FE on them, because to Collin's point, your closing rate's going to be like 5% in that market. But if you use a concept for it to either save them money or do reduced paid up or something of that nature, you're going to close a lot more deals.
Well, and to kind of explain that, what Pete's saying is that, so when somebody's on Medicaid, if their life insurance cash value accrues to a certain point, they can actually get kicked off Medicaid, and then they get kind of hosed that way, and they lose all their benefits, they lose their DSNP. So that's what he's saying, correct, Pete?
Correct.
That's what you're saying, is making sure that, if that's the case, you're protecting them so that they're keeping all of their benefits, keeping their Medicare, their Medicaid, and just making sure that they're protected that way.
And you're easily fact finding because you're using that application as your fact finder. You know what I mean? Yep. So
one thing I had, Pete, so I've been doing these, me and my dad and Jeff have been doing these annuity seminars, and they've been really, really good. So I know you've done a ton of annuities yourself. So if you could talk a little bit about the annuity game and how you're getting these annuity clients and how well you've been doing.
Yeah, so there are a lot of, I'm going to preface this, I'm no annuity expert, okay? I stay in my lane, but I like slinging them because you get huge fucking checks. So in our annuity concept, one, I have the agents tee them up to me for joint work, and then they just have to ask a couple questions. They get me the lead, and then I'll close the deal and split it with them. So we're asking a lot of, hey, Joe and Mary, I know you probably have life insurance. but do you have anything else that acts like life insurance? So I'm negating the life insurance for a hot second, and I'm saying focus on the annuity, and maybe I'll replace the life insurance later. But do you guys have anything that acts like life insurance? So what I mean by that is like stocks, bonds, mutual funds, 401ks, cash under the mattress or buried in your backyard like my grandfather used to do, anything that you'd leave behind to a beneficiary. Then they'll say, yeah, 401k, IRA, cash under my mattress, whatever the case may be. And I just asked them how it's been performing over the last 5 or 10 years. You lose any money the past 18 months, 24 months like I did? Oh, yeah, it's been awful. Well, if I could show you a product that maybe guarantees, I don't know, 6, 7, 8% interest fixed or provides a guaranteed income for life, would that interest you? It'd take me about 15 minutes. I could show it to you. It may work for you. It may not. You may not even qualify for it. I don't know. But would you be interested? Everyone's going to say, yeah. What do you mean 6, 7, 8% interest, right? And all you're doing is getting the funnel going. And on the annuity side, if you don't know what you're doing, take the generalization approach. There's short-term annuities, there's long-term legacy plays, and there's guaranteed income. And if you just stay in that lane for a little while, unless you want to really become an expert in it, if you're a life insurance salesperson first or a Medicare salesperson first or ACA, just take that approach and you'll sling some serious policies on the annuity side.
That's sweet.
I have you guys that have written annuities because I've never done an annuity.
Same.
Are you selling like a monthly, like here's how much you're going to put into the policy, or are you literally just moving funds from an existing balance to the annuity?
Mm-hmm. Yeah, I don't. To be honest, fall on my own sword, I don't know enough about the monthly contribution. There are ones that you can do that with, but again, I'm going to stay in my lane of stuff that I know to a T. I just like rolling lump sums. If you got cash, you got a 401k, you got an IRA, you got whatever, as long as it's suitable and it's legal, right, to do a rollover, I would go that route and just do the lump sums. And that's how you make a lot of money.
And they can't be like actively contributing to a 401k, right? It has to be a previous 401k that they're no longer contributing to.
They would stop contributing, but some, actually most custodians for a 401k don't allow for in-service rollovers. Some do, some don't. You kind of have to call them with the client on the phone and ask if they are allowed to do an in-service rollover. But most of the rollovers that you're doing, they're over the age of 60. They're maybe retiring, maybe not. A lot of these people have like dormant 401ks from a previous employer, business. Like, you'd be surprised. Most of the people I run into have like 3 or 4 401k accounts. Like, these people, either they're uneducated or no one advised them to mush them all together. Like, what are we doing? You got 50 grand here and 75 grand here, and you're paying all these fees. It's crazy. So most of the time we're rolling dormant stuff. We're also replacing the occasional annuity right now. But between the bonuses, the fixed interest, the guaranteed lifetime income, if they're 3 or 4 years left out for surrender, you can definitely get that past suitability and put them in a better situation now than they ever were before in their previous FIA. Most of these agents are running around, especially 5-10 years ago, slinging 10, 15-year fucking annuities, which could be good for some clients, but it's just a comp play. They pay the most, so you're going to lock up these people's money for 10, 12, 15 years and get, 8 or 9% commission. Sounds great, but then these people are screwed when you get to them. Or it just didn't do anything. It didn't perform at all. You know what I mean? So lots of opportunities in the annuity game. And just like the LOA comment in the beginning, you're going to write annuities for the first time, do joint work. I had a weird case, and I'm buddies with Roy Snar. I don't know if you guys know him, but he's an annuity maniac. Called him. I was like, dude, can you just do this for me and I'll split it with you? And he was like, yeah. Like, I don't care. I'm not, what's 20,000 if I'm going to fuck it up versus 10,000 and it's going to be done right the first time. You know what I mean? So agents need to get out of their own heads too about doing that stuff. Like, tee it up to your mentor or a peer that's good at it, and you can work out the commissions later. Who cares?
And a lot of times too, like your IMO may have a deal that you can get into. Like with us under Impact, they have this whole system set up to where you just submit the person's contact information over, and they do the entire deal and like all the follow-up and everything. Any additional products they'll pass back over to you, but like you still get a cut of the deal for just giving them a name and a phone number.
That's it.
Like don't overcomplicate it.
Well, and a lot of people, you need to have the vision that it's like that's tuition. Like
100%.
You go to college and you'll pay $80,000 for a piece of paper. Why wouldn't you still get paid? Take a split and have it done right, and you can learn how to do it right, and then go do it on your own.
Mm-hmm.
Take a cut, pay your tuition, and just go be able to learn and do it yourself.
And you're still getting paid. You would have gotten zero. You know what I mean?
Yeah,
exactly. I wanted to bring up, so you also, Pete, you have, let me bring it up here. You do a weekly training, right?
Yeah.
To where you go over everything from underwriting to, just kind of tell people about that you're putting on, that course you're putting on.
We started doing that the first week of December. So I think we've had like 8 calls or so. It's $39 a month. It's like nothing. It's like the cost of a child's living promise policy to be in it for the year. But every week I hop on for an hour. It's always me. It's not like I have a trainer. I haven't missed one yet. Even the week of Christmas and stuff, we did it. But we could have 20 people on. We have 140 people on, and everywhere in between. And we do about 45 minutes of a topic. Usually it's suggested, like we have an inbox specifically for the call. So if I see a ton of people asking about recruiting or a ton of people asking about a certain product or whatever, I'll hone in on that for the week. If they don't request anything, I'll just do my usual schedule. So it's about 45 minutes of me discussing a topic, best practices, stuff like that. And then we do about 15 minutes of Q&A. And then if we can't get to all the questions, we'll start the next week with that. So it's every Wednesday at 2:00. It's open to the entire industry. Like I said, sometimes we have 20, 30 people on, sometimes we got 100 people. So it all depends, but it's a nominal fee. And I train you like I train my agents.
Awesome.
And where is the future going? Are you trying to get into, helping more general agents, outside of your company? Or are you looking to mostly recruit within, or what's the future look like for you?
Always doing coaching and mentorship because I think it's important. That's probably our lowest totem pole of revenue, unlike some coaches out there, not in maybe our space, but universally, like our friend Dave Ramsey. I make money doing the thing that I do for the most part, and coaching is just on the side. You know what I mean? So we'll always have that because I think agents need it, and there's not enough of that in our space. But main focus is growing both ATIG on the broker side and on the LOA side. So whether you just have life or just annuities or just Medicare or whatever with us, or you want to be a well-rounded agent and bring everything in-house, we're here to help you. So just developing more lead resources internally to make the cost per lead go down and cost per acquisition go up for our agents is super important. So that's a big focus this year. For us, especially with the FCC rulings coming out or being proposed. So I want us doing business, obviously, compliantly. So it's just growth mode. We've been scaling almost too fast, which is a good problem to have, but also revamping like infrastructure. Like I had an ops manager this year, a new contracting person. So staff is incredibly important, and the right staff is even more important. So I will tell you, if you're looking to grow, maybe not like at a 1 or 2 person shop or something like that, but you got 4 or 5 agents, you need to start bringing in resources that you are cutting the checks for, whether that's salaries, an assistant, a contracting person, software. It's not just about, I'm going to rip 15 points off these people and be profitable and vacation in Greece. You know what I mean? You got to reinvest those overrides into making the job easier for both yourself and your people.
Mm-hmm. I was going to make a point, Pete. At SWAT, you had talked a little bit about your referral gathering and how important and crucial it is. And I think most agents don't ask for referrals. So if you could break down your referral strategy for the audience and how that looks like for you.
Yeah. So 2-part, the easiest training wheels of it is leveraging the beneficiary of a life insurance policy. I mean, give me a break. They already gave you 2 or 3 referrals right then and there. Make sure they're over the age of 18, obviously, so you can sell them. But our reasoning is always, and we want to get 3 at least, always, a juvenile can't assume life insurance money. You just can't, unless it's associated with a trust, and you don't want to get in the weeds with all that crap. You're not an attorney, right? So just give them that as a reason. They ask for 3, because obviously it's going to be husband and wife, and then maybe it's kids, and then maybe it's Aunt Betty or whatever the case may be. And you need obviously their phone numbers, their dates of birth. When your worst day happens, or both of your worst days happen, we want to make sure we get them that money. And in the meantime, and you can do this at any point in your presentation, tell them, text them right now or shoot them an email or whatever you want to do, and let them know, hey, I made you a beneficiary on my life insurance policy, because they should know that, right? So they can assume the funds. And my agent's going to reach out to you to explain what that means. And then I do just that. I spend 10, 15 minutes with the beneficiary, name the carrier, the premium payment, the death benefit, the claim forms, who they can call, my contact info. And then I'll just ask the beneficiaries, hey, and by the way, do you guys have anything in place like mom and dad just bought? That's it. There's no rocket science. Just ask them. And they'll give you a couple different answers. Yes, no, I have it through work, whatever. But now you're in a presentation, right? And if you find some key nuggets right then and there, hey, I've done one call closes with beneficiaries, but a lot of the times it's, hey, if I could find a strategy that could both save you money and increase your coverage, would you entertain a 15 to 20 minute conversation like mom and dad did? And I'll see if I can better your situation, just as a service to you guys, because I like mom and dad. What are they going to say? No, fuck you. Of course you can do that, right? So that's step 1, is leveraging the beneficiaries. Step 2 is you want to, whether you're 6 months in or 6 years in, you want to start dictating the type of people that you want to talk to, right? I want to talk to people that can afford $1,000, $2,000, $5,000 a month for IBC or IUL or whatever the case may be, right? So start dictating your leads. So if you snag a final expense policy for $200 a month, survey shows that people hang out with other people 10% above or below them financially, right? So all you're going to ask at the end of the presentation, if they bought a $200 a month final expense policy for $30,000, they'd probably play mahjong with somebody else that can afford that, right? So at the end, hey, Joe and Mary, listen, I appreciate this. If you're not aware, being a life insurance agent, this is how I feed my family, right? The more people that I meet, the more money I can make. So I really get paid to network. Now, I'm not going to be like a used car salesman and ask you for like 15 names and numbers. That's silly. Real quick, I just need one person, the first person that comes into your mind that's in the same or similar financial situation that you're in. Go. And I'll snap, I'll point in their face every time. And it will jog their memory, and they will say a name. Betty down the street. Very rarely do you get, well, I don't know. Something comes to them immediately. Ask for their name and number, and just ask if you can reach out on behalf of Joe and Mary to see if they can entertain a conversation. If they tell me to fuck off, I won't bother them ever again. But just one person, right? And get that one. Now you got 4 referrals per sale. So if you're doing, it may not sound like a lot when you're only doing 2 apps a week, right? But if you're a full-time agent and you're doing 30 presentations a week and you suck, you close 20%. That's 6 apps, right? Maybe it's 12 if you're only sitting with spouses, but 6 sales. So if you're getting 3 beneficiaries and 1 person in the same or similar financial situation, that's 24 leads a week that you didn't have to pay for. Now, as you get better at selling, you increase your referral rate, right? Maybe you're closing at 30%, 40%, 50%. Well, now your number of referrals exponentially grows week to week. You don't want to buy leads anymore? Awesome. Do this for a year and you'd never have to, right? Super, super simple.
And are you running the same thing for the field and remote, the same strategy, what you just mentioned?
Always. You can buy a non-res license wherever you want, right? So if they give you beneficiaries right away, every training, someone's like, what if they're in Oregon? Go on NIPR, dude. I don't know what to tell you. Do you like money or no? Right? So if they give you Aunt Betty that lives in Puerto Rico, drop the cash and solicit her. I'm sure you'll get somebody else in Puerto Rico. You know, it's not just a one-off. You're in this business for life. So make your job easier. You know what I mean?
That's so good.
Last question for you, Pete, and then we'll wrap up. So you said that you were working more so with, like, you're not doing as much final expense anymore. You're working with younger people. Are you doing mainly mortgage protection or IULs? What are you doing there?
My personal pen now is probably 99% referrals. at this point. I don't have a lot of time to write a ton of business anymore. Now we do a ton of final expense, like over the phone, right? All of our LOAs, we got almost 30 now, are all telesales, FE and Medicare. So it's the easiest barrier to entry to get into this business. But my personal deals, all referral based and all, either really huge terms, some IUL, some infinite banking, whole life, more so like holistic family planning, making sure that you're actually covered. You'd be surprised, or you wouldn't, to see like buddies of mine or friends of friends that, they carry like a $300,000 term policy. They're 36 and they make 80 grand a year. What the fuck are we doing? You know what I mean? So you have to be a little bit of a tyrant to be able to push these people into it. I would argue the younger crowd is harder to work than the older crowd. We're more skeptical. We don't want to spend money on unnecessary things, even though life insurance is the most necessary thing on the planet, right? So you got to sharpen your skills before you get into that MP market. But once you're there, the deal sizes are awesome. Like I only wrote a couple this month, but I think the average deal size is like 330, 350 a month. So they're no joke. And don't get it twisted either. I'll make a comment on this because someone's going to be like, I'm going to learn IUL, make a ton of money. If you structure an IUL or an IBC case correctly, utilizing whole life or index universal life, you don't make no money. Don't get it twisted. You might see me post a sale for like $50,000 annual. I maybe made like $4 grand. You know what I mean? Which I'm not mad at. $4 grand is $4 grand, but you didn't make 50. You know what I mean? So if you want to get into that space, you have to do a lot more volume and you have to do a lot more cross-selling, insert a term, insert a cancer policy, because there's a 1 in 2 shot or 1 in 3 shot, depending on male or female of getting cancer. So need a lot more face-to-face or over the phone presentations. And you need a lot more apps per household, arguably, if you're going to get in there. Because a lot of us, I'll be 35 next month. A lot of us just want like a $2 million term and a pound sand. Well, for a 35-year-old, that's like $80. Like, I know some of you are like, I wish I got an $80 app. Well, at this point in my career, I don't care. You know what I mean? So you need a lot more transactions to facilitate in that younger market. But it is a lot of fun.
Yep. I appreciate that, man. We wanted to give a shout out to Joshua Young's Medicare Machine Factory. He said you're a blast to play blackjack with.
If you guys go to Medicare Con, I will stay at the tables till 4 a.m. Don't tell Justin. I will be there with bells on.
It'd be awesome. So just close with us here, Pete. What's your why, man? I see you posting pictures of your cute little daughter all the time. How's that been becoming a dad? And we'll wrap up. And just what's your why to be the best that you can be?
Yeah, it changes as soon as you have a kid. I'm sure every dad or mom out there will agree. Initially, the why was make a shit ton of money, drive a Lamborghini, wear a nice watch, right? But as which is fine if you're getting into this thing or you're young and running and gunning, that's a fine why. But now it's a legacy play, especially now we're developing LOAs. We're in charge of their livelihood from a payroll perspective. We have salaries to pay now for our staff. I have my daughter to support. Obviously, wife's important too, but like something happens when you have a kid to make sure that you're around for a long time. And then subsequently, if you're not, they're set up for life. So I haven't really decided, like everybody's got their own 2 cents of I'm going to leave everything to them or I'm going to leave them with nothing or whatever. Right now, I'm in because she's only 13 months old, I'm in the phase of like, I want you to want for nothing ever. Like if she was 23 and lost her job or gotten a bunch of roll-up debt, if she wanted to get into daddy's business or whatever, like it wouldn't matter. It would teach her a lesson and maybe I'd play with her a little bit mentally to try to get her out of it. But like at the end of the day, daddy can cut a check for literally whatever you need. And I'm not there yet, but if also she doesn't want to and wants to study theology at Harvard for 90 grand a year, I'll try to suggest that she doesn't do that. But if I got to pay $360,000 for college, like it doesn't matter. You know what I mean? So that's kind of the why now is supporting the staff, supporting the agents and making sure they have a huge livelihood because Pete's going to be all right always. Like I have no doubt in my mind that if, not putting it out there, but if I lost shit again, I could go get it back in my personal pen. But not every agent in our agency has that capability. So making sure they're supported, and mainly making sure I leave a huge legacy for Mallory.
So
awesome.
good. Great way to end it.
Well, we've loved having you on, man. Thanks for making
Appreciate
the time.
invite.
Yeah. And for everybody, again, it's PeteFournier.com, right? If you want to go look at what he's got offered for you. Training's legit, man. So
yeah, appreciate it. Hopefully see some of you on the weekly call. And if you need anything, feel free to reach out. Like, I manage my own social. If you need, shoot me a DM. If you got a question, I'm not going to bill you. You know what I mean? But DM me on Instagram or Facebook. And I post a ton of free content on there too, if you ever want to watch.
Maybe Pete will finally accept my friend request on Facebook.
Oh, shit. Yeah, maybe.
slide that in there, Adam. Slide that in.
I will do that right now.
Okay. Thanks,
I
Pete.
wasn't famous enough before, so
Thanks, guys.
Thanks, man. Have a good one.
Bro.
You too. Take it easy.
Everybody.